Hello, everyone, and welcome back to the Daily Stack. I'm your host, Rob Wallace, and we got a huge show ahead of us today. Love to bring it to you every Monday morning, breaking down the biggest news in Bitcoin because we just had a week which was an absolute doozy. It made very little sense. Bitcoin just fell through the floor and then rebounded over 18% back up. And now we sit just about 69,420. Not too bad, but not where we thought we would be at this moment. There's so many things to figure out, so many things to break down. And of course, Bitcoin is still stronger than ever. So let's dive right into it and examine what just happened to Bitcoin. Last week, Bitcoin experienced one of the most violent crashes in history. A five-figure drawdown in an hour without an exchange failure and no obvious catalyst in sight. So naturally, the market went hunting for a culprit. Early theories blamed a Hong Kong hedge fund blowup, a yen carry trade gone wrong, or a secret institutional liquidation. And while parts of the story felt plausible, the data has since told a more important story. Rather than a single fund failing, this had all the signs of a systemic de-risking. On the same day Bitcoin collapsed, Goldman's prime brokerage desk recorded one of the worst multi-asset performance shocks on record, a statistical outlier that forces risk managers to step in and say one thing you don't want to hear: cut everything. And Bitcoin is no longer isolated. IBIT traded over $10 billion in a single day. Option volumes hit all-time highs, and Bitcoin moved in near perfect correlation with software equities. This is what you call a portfolio level deleveraging. And here's the key detail. Despite the crash, Bitcoin ETFs saw net creations, not redemptions, on Friday. That tells us that this was not investors fleeing away from Bitcoin. This was dealers, market makers, and hedge funds unwinding hedge positions, basis trades, and short gamma exposure under extreme volatility. Once downside gamma kicked in, the hedging became reflexive. Selling created more selling, and price moved faster than fundamentals could cover. Then, just as violently, it snapped back. This is the cost of Bitcoin becoming a global macro asset. It now trades inside the same leverage, options, and risk frameworks that dominate every major market. And to the flip side, when this machine turns around the other way, the upside will not be gradual either. We shouldn't look at this as the end of the cycle, but rather perhaps the confirmation of a new one. Let's get into the stack. Ladies and gentlemen, I got my good buddy here, Juan Galt.
No battery, please charge.
Sir, how are you doing today? Good morning. Good to see you.
Good. How are you?
Dude,
Great to be here, man.
I'm very grateful to have my long-term friend, somebody with a long-time Bitcoin news history. I'm jumping on a bunch of spaces with you throughout the years, and now we're here streaming live. So yeah, for people who don't know the wonderful Juan Galt, tell them a bit about your story in Bitcoin and what you're doing today.
Yeah, I mean, I've been reporting Bitcoin since 2015. We worked together for a while. We had a collaboration made. I think we recorded like 100 different spaces, Twitter spaces. So that was fun. And now I work for Bitcoin Magazine. I'm a business reporter for them, and I mostly just write business-related articles.
That's awesome. How many articles a week are you pumping out?
2 or 3. They're like long-form articles, usually 500 to 1,500 words. So they're not breaking news. They're sort of long-form. Yeah.
Nice. Yeah. No, you do great work. You've got a long time in this space. You are also featured in the documentary. What is it called? Apocalypto?
The Anarchists.
The Anarchists, yes.
HBO. Yeah.
The Anarchists, yes. Great documentary if anybody has not seen that yet. Examining the anarchist scene down in Mexico before it all went awry. Well, here we are today. As we do every single Monday, we break down the biggest news in Bitcoin with our newsletter, Bitcoin News Weekly. It comes out every Monday morning, 7 a.m. Eastern, straight to your inbox. And then we break down the headlines with a new guest each and every week. This week, we're very glad to have Juan Galt. And so let's get right into it. The title of this week's edition is Play Paper Games, Win Stupid Prizes: How Leveraged Hedge Funds Triggered Bitcoin's Crash. The financialization of Bitcoin has driven new all-time highs while also amplifying violent drawdowns, like Thursday's 10K red candle. So Juan, from just your perspective, what were you thinking on Thursday when things just like went haywire?
Yeah, I mean, it was definitely somewhat unexpected. I think it caught a lot of people by surprise. There was it was weird because there's a bunch of people that are saying, "Oh no, we're this bear market. It's done. Like we're gonna crash here. It's bad." And there's a bunch of people that are saying, "No, the 4-year cycle is done." And the arguments for the 4-year cycle ending are, I mean, I bought them. They're like, big volume institutional holders have steady hands, diamond hands, hodl, deep hodl, and but I think what we're seeing is like actually no, the price is moved. I mean, this is the analysis that's coming out now. The price is moved based on all these synthetic Wall Street leverage things and not necessarily based on other fundamentals right now. What's alarming is the rise in gold, right? When you see gold, silver, and other commodities skyrocket the way they have, while Bitcoin is sort of testing supports like 60,000 level supports. Um, it does kind of beg the question, what's going on here, right? And I think the hopium is, there's going to be a rotation out of gold into Bitcoin now that gold has probably topped. I think the reality is there's probably very deep global market things happening, and because Bitcoin is the most liquid asset, Bitcoin is the thing that the big players sell when they need to cover other positions that are less liquid, right? So like if you have gold, right? Let's say you're trying to like settle a gold denominated trade, but the gold is like on the other side of the world, it's going to take 2 weeks to arrive, right? So what do you do to settle to add to your margin, so to speak? Let's say you were short gold, right? To add to your margin, you sell the Bitcoin, cover the gold, and then maybe on the other side you can rebalance and get out in a decent position, right? So usually when Bitcoin crashes, it's because there's a liquidity crunch and nothing else can move, and that's in an uncomfortable way. The reason why Bitcoin is so powerful is because it's the most liquid asset that there is, and so Bitcoin tends to crash first, and then it tends to recover first when the liquidity comes back.
Yeah, it's definitely intertwined into the world's global financial system at this point with the ETFs. $10 billion of IBIT traded on Thursday is just twice the highest all-time record before. So this thing is moving. It's moving hands a lot. And as you said, when people need liquidity, they look to Bitcoin. That's both a blessing and a curse. And I do think that the same way that we saw this sort of exponential trip down, we can see a rip quickly to the upside as well, with it being so deeply in the financial system now. So lots of headlines. Let's get into it. Beyond just the crash, we had some adoption news that we want to cover here. So the first $1 million Bitcoin payment settled over Lightning happened this last week in just 0.47 seconds between SD Markets and Kraken, proving Lightning is already operating at institutional scale. Did you get a word of this? You see this?
Yeah, I did see it. I think this is the kind of thing that makes me wonder what's going on, because there's a lot of fundamentals that are very good, right? Like on the medium of exchange side, Cash App is systematically deploying new retail adoption. There's a lot of Lightning volume, a lot of different like very big numbers on people using Bitcoin as payments. In theory, the way the Wall Street is buying in. So I think this is sort of part of that conversation. Well, anyway, I mean, there's a lot to say here, but the fundamentals tend to be good, right? Like adoption is happening. So this looks like just sort of a temporary financialization sort of issue.
Yeah, taking place on January 28th, the transaction valued at $1 million at the time settled near instantly with near zero fees, marking the first publicly reported seven-figure payment on Lightning Network. The transaction was powered by Voltage, whose enterprise-grade Lightning infrastructure provides the managed nodes, liquidity, and uptime guarantees that regulated institutions require to move value at scale. So, I mean, you've been reporting and using the Lightning Network since it was founded, right? So $1 million going over the Lightning Network is pretty impressive, right? You couldn't get $1,000 a couple of years ago.
Yeah, that's huge. I had like a couple $1,000 transaction get clogged up once. So $1 million is very impressive. Yeah, the Lightning Network is very good. It's very strong, very mature. It has better privacy than Bitcoin on chain. People often don't realize this. It is very fast. It's generally very efficient, and very low error rates. And if there's an error, you just try again, and it usually works. So, I mean, I think Lightning is, it's working pretty well.
Yeah, it's impressive how far it has come, and it's laying the groundworks. I mean, Voltage, Amboss, they're doing really amazing stuff when it comes to just the Lightning infrastructure. Amboss just came out with Rails X, so now you can do like currency trading on Lightning, and also they made it super simple to get a yield, like actual native yield on Bitcoin. Right? If you stake your Bitcoin with Amboss, you're not actually staking it, but you're providing liquidity to the Lightning network, and you'll get a yield in Bitcoin for providing that liquidity. It's they make it super simple, plug and play, and the growth of infrastructure keeps on coming for Bitcoin. And over here on the adoption side, we got Strategy last week. They had their earnings call, of course, where they reported a $17.4 billion loss for the fourth quarter, one of the largest, I think, in history. But they also answered some questions when it comes to some of the FUD that's been going around. And so they are launching a coordinated Bitcoin security initiative with the global cyber, crypto, and Bitcoin security community to proactively address potential quantum computing threats to Bitcoin. So we've got a little video here of Mr. Saylor explaining that.
We are going to initiate a Bitcoin security program that coordinates with the global cyber security community, the global crypto security community, and the global Bitcoin security committee in order to help and contribute to consensus and solutions to address the quantum computing threat, as well as any other emergent security threats that evolve. We think it's reasonable and appropriate for us to do this, given our large responsibility as a Bitcoin holder, but we want to do it in a very responsible fashion, and we want to make sure that we coordinate with the global cyber, crypto, and Bitcoin security community.
All right. So what do you think about that? I remember, of course, Saylor started the mining committee too back in the day when there's a bunch of FUD regarding environmental ESG concerns around Bitcoin. So now the new big FUD is quantum. How much probability do you stake of quantum being a problem for Bitcoin within the next 10 years? And do you think this is a smart initiative to get started?
Yeah, I mean, quantum is an interesting FUD to deal with because it does challenge the developer community to say, well, okay, if it does happen, which it could happen in theory, maybe, then how do we upgrade in an efficient manner? And the thing is, Bitcoin is very slow to make changes. But if there's security related things, usually they move very fast. I mean, at least they've been working on quantum. They've been talking about quantum core developers for a decade, well over a decade. There's an initiative to create cryptography that's resistant to quantum, that's optimal for Bitcoin for like a good year, and a lot of discussion about how to integrate it into Bitcoin, in a way that makes sense. There's a lot of discussions about what to do with the coins, like Satoshi's alleged coins, which is roughly 1 million Bitcoins that would be vulnerable to quantum attacks. But I think there's also so all that stuff, there's a lot of discussion on that. And I think that the industry is moving towards having an option in case that quantum does suddenly, let's say, go parabolic and then we got to move. But I think the other reality is that there's a lot of nonsense on the quantum side. So one of the issues is these quantum startups need to raise money. And the way you raise money is you scare people. I don't know if you've noticed in AI, but with AI, it's AGI is going to replace all engineers tomorrow in 6 months, 5 months, 2 years, right? That's just marketing in order to raise capital. I think the reality is engineers will tell you that AI creates really mediocre code and it's full of bugs and it's cute, but it's not really great engineering. So I think we have a similar thing with quantum. One of the analysis I saw recently is they factored some low number, double digit number. I think it's below 21 or something like that, which is basically it did some theoretically complex mathematics, but statistically, in order to hit that number with dice, you roll 100 dice, but they rolled 140 times. So they're worse than normal odds.
Mhm.
It was something like that. This was on the All In podcast. So I think, I don't know. I think there's a lot of fluff, but theoretically, it's probably good to have quantum resistant cryptography. So this to me is Michael Saylor trying to put out a signal to the broad public markets, like, hey, we're taking the quantum threat seriously. You can relax about it because the public markets are afraid, and the whales are scared. They're not necessarily always engineers. I mean, maybe they probably have engineers that are looking into it. But anyway, this is, to me, looks like hey guys, relax, we're gonna deal with it type of thing. How it actually plays out, it's interesting because Saylor is not somebody that's ever really been involved in a soft fork, and is somebody that has a lot of influence and economic power in the industry. And so it's going to be interesting to see how this sort of security council plays with the broader Bitcoin cybersecurity kind of ecosystem.
100%. Quantum is not a threat at this moment, but it is important that Bitcoiners start talking about it because it will take time to A, come to consensus, and then B, literally migrate. Everybody's got to move their coins to new addresses whenever we do come up with a quantum proof solution, right? So that's going to take months and months, maybe years, in order for the full migration to occur. So it's better off that we start talking about it now. But also, we shouldn't rush into a solution because what we could come up with in a year, 2, 3 from now could be much better than, say, BIP 360 that we are currently looking at as a solution to the quantum threat. But we got a comment right here from Christian over on YouTube. There are not yet 2 logical qubits operating together under fully fault-tolerant quantum error correction. That means that quantum is fiction right now. So yes, it's not close. It can't factor a number larger than 15. And I think that's a great sign to show us that progress is being made when it can start factoring things like 21 and higher, right? But we're not there yet. So it's good that we are talking about it. And I think it is smart for Saylor to sort of get ahead of the market. So, Jeffries just divested out of Bitcoin because they're scared of quantum. So it's good to address this, but it's not a big threat to us at this exact second. And speaking of developers, we got to talk about Gloria Zhao. She just stepped down as a Bitcoin core maintainer after more than 5 years of contributions, during which she merged 290 commits. So she was a very controversial core maintainer, especially over the last year, in terms of the guys who run knots were not happy with her, thinking that she was not a economic Bitcoiner in the way that they are. And so she was bullied a lot, right? And now she's no longer a core maintainer. But I found this thread and thought it was really interesting. Looking at her actual contributions over the last 5 years to Bitcoin Core, she offered 503 commits, 290 merge commits, and 10 different code domains. So yes, I mean, she was plugging away on GitHub. She was merging commits here. So this is solid work, right? And so
yeah,
you might not be happy with the way that she looks at economics in Bitcoin and the way that the op return debate played out, but Bitcoin lost a real contributor here, right?
Yeah.
What's your take on the knot situation, op return, and now Gloria stepping down?
Yeah, I mean, I don't like to see this. I think Gloria, I don't know Gloria personally or anything. I don't have like a particularly in-depth analysis of her work. It does seem, I mean, we know that she was a core maintainer specifically related to mempool policy things, which is one of the reasons, probably the main reason why the knots people were so hyper focused on her. And yeah, she made some, she cryptoed a little bit back in the day before she was a core contributor. It's like, come on, who hasn't played with other blockchains and technologies? Maybe the knots people are super pure, but I have my doubts, and I know some of these people. So but it's I think it's a double-edged sword what's happened here, because she clearly got bullied out of the role, and this is usually how core maintainers leave the role, is they get harassed out of the role, right? So if they enter into areas that are somewhat controversial, or like controversial in and they don't have like majority or large majority support, then they end up becoming targets and memes and symbols, and then they get harassed online and they get sick of it and they leave. But Lightning engineers that I've seen comment on it say that her work actually made Lightning a lot more efficient, and that's very good for monetary reasons, right? And I don't think there's one core maintainer that said that they want non-monetary things on Bitcoin. They just disagree with how to solve the issue of arbitrary data on the blockchain. They think it's unsolvable, so they just prefer to take, let's say, the approach of creating a little garbage bin where you can put the arbitrary data rather than try to fight a war that you know you're going to lose, right? So I think that this is actually kind of tragic, and the unintended consequences is that core contributors and maintainers just got a reminder that if you do anything remotely controversial, you can end up becoming a meme and get harassed, and you have to have really thick skin, which means they're going to be even more risk averse, right? And they're going to be even more timid, right, into about what they change. And that's not great if you want Bitcoin to be a more sophisticated tool, right? Like I don't necessarily need EVM Ethereum style contracts on Bitcoin, but I would like CTV. CTV is like a very simple change that could improve self-custody dramatically. And these kind of events are not good for a future. And the same goes for quantum, right? Like, how is quantum going to play out if core contributors are terrified of being harassed out of the role, right? So I don't think this is good. And I think the filter people really got out of control in this one.
But this isn't the first time, right, that a core maintainer has stepped away because they've been harassed and bullied. And it just goes to show you how ruthless of a job it really is. You know, it's thankless in many ways. If you have that level of skill, you could probably be getting paid much more at different places if you did go into shitcoins and what else. But no, you're doing it for the love of Bitcoin and what it stands for. And then you go and get harassed. So, I mean, of course, the way that she played out the whole entire fiasco wasn't great either. They were censoring comments in terms of who could talk about the changes they were doing with op returns. So, I mean, the drama is very, very thick, and we don't need to get into it here. But this is the result of how it all played out. V30 was released, op return was expanded, and Gloria is gone. Who's happy? Like, nobody. So that I guess that's the way that Bitcoin governance goes. Crazy stuff. But you know, it's how it all works out. Okay, jumping over to regulation. Clarity Act odds of passing jumped to 69% last week as Chuck Schumer pushes to cut a deal following Fairshake's unveiling of a $193 million midterm war chest, though key Democratic red lines remain. What does that mean? So the Democrats have been very, they've been putting their feet, dragging them in the sand, saying that we don't want to push through clarity if Trump is going to keep doing all this crypto business. And Trump has made it very clear that you are not allowed, these Democrats are not going to be able to stop him and his family from messing with Bitcoin and Bitcoin mining and altcoins and stable coins and all that jazz, because now it's a significant portion of their net worth, right? I think around 20% of their money is tied into crypto in some regard. Chuck Schumer, a lead Democrat, sees that getting Clarity Act is important, especially because Fairshake, which is Coinbase, is the leader of this super PAC who donates a bunch of money for the elections, helped get Trump elected 2 years ago. They've got $193 million, more than any other super PAC out there. And so if the Democrats are being very obstinate about the Clarity Act, it's clear that this Fairshake money is going to go to Republicans who can get this passed. Have you been staying on top of the Clarity Act? Do you think it matters in the long run for Bitcoin, or is this just banks being greedy and Coinbase being annoying?
Well, I think what I see with the Clarity Act is a conflict of two economic interests, right? So there's the crypto industry, and then there's the banking industry. And the banks have a moat, a regulatory moat that is developed over a couple hundred years or more, probably maybe 600 years if you go back to like the birth of banking in like the Middle Ages and Enlightenment era, et cetera, et cetera. But basically, they have like a way of operating, which is they get to do fractional reserve and they get to use your deposits for investments, and then they pay you an interest on that. But the interest that they pay is just gone. It's just collapsed to like near zero. And so they're not only somewhat fragile to potential bank runs where people sort of try to withdraw the cash, but they don't pay much interest. And so the Genius Act opened the door for the stable coins to enter the market, and the stable coins are the ones that are like legal within the United States in the sort of Genius framework. They're fully reserved by U.S. treasuries, which means that they earn a sort of yield on the treasury on the U.S. government debt. They are essentially backed by dollars, and they can pay up to the yield of treasuries in interest, right? So, I think Tether is one of the most profitable companies in history now because they're just like grabbing all this sort of treasury yield, right? They could give half of that to their consumers, to their users, and they would completely wipe out the competition in terms of interest and risk, right? Because you're not running on a fractional reserve bank. So like if the Clarity Act allowed stablecoins to and crypto companies to like Coinbase, right, to offer interest on deposits, it does threaten the banking industry. And I think the banks are actually defending their moat, and the Democrats are working with bankers. The Democrats haven't been democratic politicians, or like they've never really been populists, right? They've always supported kind of like the economic elite. And I think this sort of shows and is very transparent in this issue. So we'll see if they can get it through. But technically, the Republicans still have the majority on all fronts. So
They do until November, right?
Right.
And
Right.
I'm sure the banks have their talons in some Republicans who will stop this if they want to. But I mean, I think both sides see that in terms of the geopolitical machinations, they need stablecoins. They need the debt to be bought up by a new actor here. China just said last night, that they want their banks to divest from treasuries as much as possible. So China's been doing that for at least the last decade, and the amount of treasuries they've have been cut in half. And so they need a new buyer to step in here. And Tether has been that. They have more treasuries than Germany. Right. So somebody needs to buy this debt. And I think Democrats and Republicans both see these stablecoins as a way of propping up the dollar, maintaining that dominance around the world. And I think Clarity Act will get pushed through. And then we could see like hundreds of billions more dollars worth of stablecoins being pushed into this market. And usually when the amount of stablecoins go up, Bitcoin goes up. Right.
Yep. I think that's probably foreign policy strategy now for the United States, at least under Trump, to open the gate for stablecoins to kind of revitalize the American financial system and dollarize other economies. And I don't know if this is confirmed, but I saw some tweets out there that China is banning all crypto again.
Yeah.
And I don't know if that's true, but like this is sort of what you might expect in a geopolitical situation like this, where Americans are saying, well, yeah, we're going to use the agility of things like stablecoins and crypto to expand the territory, so to speak, of the dollar, right? I think what's really interesting, how Tor was created by the U.S. military in order to be able to run, intelligence ops in foreign nations. I think there's a future where anonymous, censorship-resistant financial infrastructure gets supported and defended by American intelligence and government in order to defend the crypto dollar, so to speak, in foreign nations. And if we can make sure that Bitcoin is a piece of this infrastructure, then when eventually the dollar dies, we end up with like really robust censorship-resistant technology, integrated with Bitcoin. So I mean, these are like dark games, but like this is definitely kind of the real politic of things. Like this is actually how it could play out. And the East is just buying gold, right?
Yeah.
So they're gonna stay in the Bronze Age while we're on the digital age.
Well, we are in the digital age, and if you're doing that, you got to be getting Bitcoin. And where do we get Bitcoin? We get it from Rhino. Rhino is giving you a next generation Bitcoin banking app designed to handle all of your Bitcoin needs in one place. Here's what you can do with Rhino. You can buy Bitcoin at some of the lowest fees anywhere. More sats for every dollar, make payments on the Lightning Network instantly with near zero fees, send cash globally, fast and easy, perfect for friends or family in other countries. And you can even set up automatic savings. Of course, you can DCA on your schedule to make sure you stack every single dip. And this is just the beginning, because soon you'll be able to pay bills, direct deposit, borrow against your Bitcoin, and even save for retirement, all within the Rhino app. And of course, security is a top priority. Rhino protects your Bitcoin with biometric verification, 24/7 fraud protection, and the confidence of knowing your Bitcoin is never, ever rehypothecated. Go to rhinobitcoin.com. Tap the link below in the YouTube description. Use the code word Bitcoin News. You'll get $10 of free Bitcoin in your account just to get started. Rhino is a great team. They're really going hard this year. Reach out to them. If you have any questions about their app, using it, buying Bitcoin, they're more than happy to answer anything. Great guys. And that is Rhino Bitcoin. Thank you very much for being a part of this show. All right, Juan, let's get back into the headlines. And what do we see here? Gemini. They're cutting 25% of staff and winding down operations in the UK, Europe, and Australia. UK accounts are now withdrawal only as the country's hopes of becoming a crypto hub begin to fade. So I think the crypto industry is in sort of rough times right now. You know, Gemini is a big player, and if they have to cut 25% of staff and close global operations, of course, they're maintaining America and Singapore. Singapore is still live trading, but UK, Europe, and Australia, gone. It's not worth it for them to keep it open. What do you think is going on here?
Well, this is probably just them getting harassed by regulators in the EU. Certainly, Australia is not a particularly free country. We saw it during the COVID era. They went really hard, and the Australian government has been generally hostile to crypto and to Bitcoin and this industry, a lot of the banking and such. So they're probably just getting harassed, and maybe. I mean, the thing is, like, these exchanges are also casinos, right? I think we have to recognize that. And the crypto market is wrecked. There's everything is down 80%, even, while Bitcoin has sort of tested all-time highs. And so I think, one of the things that's happening that's kind of interesting is that our generation, right? Like, we're in our 30s, right? We're not kids anymore. We're not in our 20s. We're not like necessarily the cool kids anymore, and so crypto and Bitcoin to the younger generation is kind of a thing older people do, right? And all these narratives have been played out, and I think maybe the casino is dying, right? Or maybe something else is going on inside of Gemini. I'm not sure. I'm not privy to the story in detail, but the EU is certainly very hostile, and but there are other exchanges that are advancing into the EU despite the hostility. So I think for people that are in these markets, they better study self custody and use a lot of the peer-to-peer, more censorship resistant tools out there, which are pretty good. They're not amazing, but they're pretty good. If they want to have some financial liberty, because this is also like probably if it fits in a reaction to capital controls in these nations, which the EU certainly is advancing capital controls. Then that means they're coming for your money. That means that the government's coming for your money. So you might as well find some alternatives.
Yeah, it definitely seems the way in terms of EU, the unrealized wealth tax coming to the Netherlands. They're floating that idea in France as well. Seems like, EU is putting up that fence, and they want to make sure that capital does not flee, because,
Yep.
I mean, we could see a financial crisis this year, I think, in France or UK. just the tax receipts don't pay for. I think somebody who's like 65 retiree in France makes more than the average person who's in their prime working years, right? So just the math ain't mathin', and they want to make sure that that money does not get out. So it makes sense that these exchanges are having a very hard time over there. And what you brought up is right in terms of, Bitcoin, we need a new generation, right? We need the youth to step in. And we saw a huge influx during COVID and the money printing then. But since then, a lot of people got burned, of course, with NFTs and meme coins. And as we saw with the reaction last night to the Coinbase ad, there was videos going around X of people throwing up the middle finger at Coinbase for the ad that they put on during the Super Bowl, right? So the perception is not great for these crypto casinos. That's absolutely true. And I think these prediction markets have actually stolen a lot of mind share when it comes to making money in a quick way and betting. But Bitcoin's the opposite of all that, right? It's savings technology. It's the only asset with a limited supply that you can audit every 10 minutes and know that is not being debased in front of you like everything else. Fiat-wise.
Yeah.
So people will learn, and that's why we're here to chat about it. And another exchange fail that we saw this weekend was BitThumb, a Korean exchange. They had a promotional error. They wanted to send out 2,000 Korean won, which is roughly $1.50 to a bunch of people. They wound up sending them 2,000 Bitcoin, or at least that's what it looked like on their app. Some people saw it immediately and went and market dumped, and it caused the price of Bitcoin on the BitThumb exchange in Korea to dump over 10% more than any other exchange in the world during that time. They sent out roughly 620,000 fake Bitcoin. I mean, it was just like an internal ledger. They didn't actually send the Bitcoin to the people, but the few that actually saw it and were able to grab it immediately and sell it, I believe there was a couple thousand Bitcoin that were actually sold that way. So huge mistake by whoever was running this promo over here in Korea. But if an exchange just dumped 2,000 Bitcoin into your account, would you go and sell real quick?
Oh, market sell instantly and get that money out.
Yeah, man. Crazy. Like, this stuff still happens, and it goes to show you that even though we are,
I don't know if I would market sell it. I would definitely withdraw it. Like, okay.
Yeah. Right. Some users were accidentally given 2,000 Bitcoin each instead of a reward worth about $1.40.
Oh my God.
Yeah, dude.
Oh, Jesus Christ. That's a lot of Bitcoin.
Yes. Because of this mistake, hundreds of users suddenly saw extreme large Bitcoin balances in their accounts. At current prices, 2,000 Bitcoin is worth roughly $130 million, just airdropped. So they sent out 620,000 Bitcoin, sums up to $40 million. At one point, Bitcoin was trading at around 81 million won, about $55,000 on BitThumb. This was 10 to 22% lower than prices on the global exchanges. However, I do think they were able to get a lot of this back. But yeah, I mean, it just goes to show you this industry, even though Bitcoin is 17 years old, still has a lot of growing pains and fat thumb problems.
Wow.
And then Binance. They are converting $1 billion from their Seifu fund in stablecoins, turning it into Bitcoin. And they have bought 6,230 Bitcoin over the last week, equaling $434 million. And of course, they timed it perfectly. Binance has gotten a lot of flack over the last couple of weeks, months. People are not too happy with CZ and the altcoin casino that he's running or has run in the past. Do you think that this move is out of the benefit, they're doing this out of the goodness of their heart to help the community, or is there some ulterior motive here from Binance?
I mean, I don't know if it's Binance or who it is, but it does seem like they're hunting the long positions. They're probably trying to, like we've talked about this, in our spaces last year and the year before. There's this sort of Bitcoin Wall Street double Trojan horse situation going on. I actually wrote a long form article about this on Bitcoin Magazine. If you look up the double Trojan horse Bitcoin Magazine, you'll find it. But there's sort of like this weird game playing out, right? Like, on the one hand, the Bitcoin industry is entering Wall Street. Wall Street is sort of like kind of welcoming Bitcoin in, and there's sort of like an integration into the infrastructure. On the other hand, Wall Street is financializing Bitcoin, right? And so I think both industries are merging, and that's going to have consequences. And part of the consequences is, well, what you're seeing, the kind of volatility that you're seeing right now. But on the other hand, the infrastructure, the Bitcoin infrastructure is sort of entering and sort of merging with Wall Street. And eventually that means that Bitcoin might be kind of fundamental financial infrastructure you can't really remove. And so that's the end game for Bitcoin. I think in Wall Street, it's that Bitcoin becomes a heavyweight asset of some sort. And I mean, I wrote a lot about this in that article, but how this plays out in the short or midterm is going to be interesting.
Yeah, I mean, people need to get their time preference straight, right? I mean, I think with Bitcoin, once you really grok it, you understand it, you think, oh my God, the world is going to adopt this immediately. I need to get my hands on as much as possible before the world figures it out and it gets outpriced for me. But then you've been in this space for years and you realize adoption, it takes time. People only really get something as revolutionary as Bitcoin when they find a need for it in their life. And I think things like, of course, like Occupy Wall Street when it all started, and then COVID were two great catalysts to get a large swaths of people realizing that they're being debased and that the dollar is a melting ice cube and that if they save in it, they are going to be royally screwed. But there's lots of other distractions and signing objects, and these exchanges are not really helping us get that message out that Bitcoin is so much different from everything else. They hide it, they bury it. And they don't really show the value prop of Bitcoin compared to the rest of these things. But it's necessary.
Yeah. Well, ironically, like a lot of the dreams and the marketing, the fluff of the crypto industry, and when and just to be clear, when I say crypto, I'm talking about like everything outside of Bitcoin, right? And I'm referring to some degree stable coins, but really I'm talking about altcoins, right? And a lot of the marketing from altcoins is I think has turned out to be just marketing. Like it's sort of people are fundamentally disillusioned with it. They don't buy the hype anymore. There's a long history of failures on the altcoin front. The only thing that's like the meme coins are a complete mess. The only things that are real are Bitcoin and stable coins, basically.
Yeah.
And I think the market as a whole might be recognizing that, which is why something like Gemini doesn't really maybe make sense as a business anymore, right? Maybe they are rolling back. It's like, well, okay, what's our deal, right? What do we do? We're, like how much spread can we really get out of Bitcoin to stablecoin trade? I don't know. I'm just speculating, but yeah.
Well, the Bitcoin network has continued to grow, and one thing that has been parabolic has been hash rate. But we saw this week a difficulty adjustment, which was pretty nuts. Bitcoin network difficulty fell 11%, the steepest drop since China's 2021 ban, and the 10th largest negative adjustment on record, due to a U.S. cold weather streak. And that caused a lot of miners to shut down in order to support the grid. But I mean, if you look at this, the difficulty of the Bitcoin network, of course, the difficulty goes up when more miners are turned on and join the network in order to ensure a 10-minute block time. It self-adjusts. This is one of the most brilliant things about the Bitcoin network. So when a lot of miners come on, it gets harder to find a block. And when miners leave, it gets easier. And that's what we saw. This 11% drop happened right here. Every 2 weeks, the Bitcoin network self-adjusts. And we saw this giant drop in both hash rate and, of course, difficulty. Any thoughts on this move?
I mean, obviously it has to do with the price as well, right? If the Bitcoin price drops a lot, plus you got a really nasty winter that's drawing like rising electricity prices and so on, then the profitability of mining crashes. And so some of these big players prefer to like stop than accumulate. But what that says is these players that are exiting the current sort of hash race, they're not hodling, right? They're selling for fiat, right?
Mm-hmm.
And that's what you see in that chart is they're not interested in the future of Bitcoin. They're just like selling for fiat on the spot. I think miners that have a fundamental let's say, a long-term view of Bitcoin, they're probably buying right now. So this is kind of a shuffle of the mining sort of market, and it's good. It means the market's working. It means that the people that are not, that are playing different games, they're sort of diversifying. A lot of these big miners are talking about AI, and like they're diversifying into AI, which is not trivial, because GPUs are like, AI has very different reliability requirements and infrastructure than mining, but it has similar power draw demands, which is why the business sort of makes sense. But so I think, I mean, that's the main thing that comes to mind, is that these people are not stacking sats; they're selling for fiat.
It's a tough business. Bitcoin mining is ruthless, and you've got to be extremely efficient in order to survive. And yeah, a lot of them are making that transition into high.
It's a good time to
HPC.
get into mining.
It's a good time. Yeah, yeah. If you got cheap energy, if you got stranded
got-
energy somewhere,
you got any spare ammo, any dollars
yeah.
left.
It's this, I mean, but it's also necessary. I mean, they were getting squeezed so much, the price was not keeping up, but the difficulty just kept going skyward. So this gives miners some relief, and hopefully they can find their bearings in this crazy market of ours. But if they were smarter, they could not sell that Bitcoin. Instead, they could take a loan out against it. And that's what our friends here at Arch do. Arch provides world-class security and white glove service, so you never have to sell your Bitcoin. If you're listening to this, you did the hard part. You stacked, you held, and you did not panic sell, even that crazy drop we just saw last week. But real life happens. You've got taxes, new opportunities. Say you want to put down a purchase, such as a down payment on a house, but selling Bitcoin just feels wrong. That's where Arch comes in. Think of it like a flexible line of credit with rates starting as low as 8.5% APR. You borrow what you need, repay anytime, and only pay interest on what you use, all without triggering a tax event. The best part, the Bitcoin stays yours. They have a strict no rehypothecation policy, so your collateral is never lent out. It's held in qualified, insured, bankruptcy, remote custody with full transparency. Go today to archlending.com. That's ARCH lending.com to get started. All right, Juan, we got one big story I really want to get your opinion on. Over here, we have a situation of the Epstein files. Have you been following this? Have you been reading what's been going on in these emails?
I have. Yeah.
Is your faith in humanity lost?
It's rough.
Yeah, to say it lightly, dude. It's a doozy.
It's crazy, dude.
2 weeks ago when it came out, that weekend, I was just like, oh my God, I can't believe all these conspiracy theories I believed my whole entire life are actually true. I'm not the crazy one. You guys owe me an apology.
Yep.
We are run by reptilian satanic pedophile in many ways, right? It's crazy. But instead of talking about that dirty stuff, we have to talk about this. There's an email in an exchange with Epstein and one of his friends alleging that the gold in Fort Knox is missing. It's just not there. So this is an email. It wasn't exactly written by Jeffrey Epstein. It was to him, but his friend sent him this, and you got to wonder why. The email talks about Russia says IMF chief jailed for discovery. All U.S. gold is gone. A new report prepared for Prime Minister Putin by the Federal Security Service, the FSB, says the former International Monetary Fund chief, Dominique Strauss-Kahn, if you guys remember that name, was charged and jailed in the U.S. for sex crimes on May 14th after his discovery that all the gold held in the United States Bullion Depository located at Fort Knox was missing and or unaccounted for. So this email says that Putin got a report that America's gold is just not there. And now we see gold flying around the world. It was actually super interesting when Trump got elected back last year before he actually got into office. We saw all the gold leave Europe and come back into America, right? A lot of the London bullion that was stored there was being transferred back into America. The biggest power players are dealing with this gold right now. And if America is completely lacking it, if the 8,000 plus tons that are supposed to be stored at Fort Knox are not there, that's kind of crazy. And why have we not had the audit of Fort Knox?
Yeah, what happened to that?
Which Trump and Elon were so adamant about for like 3 weeks, and then just went radio silent on it.
Completely silent on it. Never brought it up again. Yeah, curious, right? Wonder what's going on there. Yeah.
Yeah, it's I mean, but it does seem as if we're into this world where the East is going gold, and it means we got to go Bitcoin, right? America. You're in Latin America. You're under the new Trump Monroe doctrine. Yeah, what's your opinion on what happened in Colombia with Maduro, and what is the take on the ground in Latin America right now?
Yeah, I mean, I'm in Colombia, so Colombians generally, at least the ones that I know, are all kind of like happy about how it played out. They're relieved. They were very tense during the build-up and before the free helicopter ride that Maduro got to back to the States. They were very tense, but on the other side of this, a lot of the Venezuelans that have left the country are very happy about it. There's a kind of renewed hope because the tension was high, right? And it was a little bit demoralizing. The country kept failing, so new waves of immigrants kept coming. Crime in Colombia kept rising, and so now this might actually stabilize things. On the Don Roe doctrine or whatever, in my opinion, I mean, I think it's pretty obvious that these major sort of politicians, right, this world power presidents, they're playing chess, they're playing Risk, really. Like Trump's playing Risk. You've seen the meme, right? It's like, get Greenland, get the Colombia Venezuela area secured, and you've got the Americas, right? Get Alaska. They already have Alaska, right? So I think that's actually what's going on, right? Like the world's getting sliced up into hemispheres of control. The Americas are, going to be run by the United States in a soft power kind of, geopolitical thing. Russia is going to get Eastern Europe and the Southern, like Northern Asia or whatever, and then China's just going to get that whole slice of the East, right? And that's probably the natural sort of order of things as these powers realize they can't. Like the United States cannot project power that deep. Like Ukraine is basically a failed war for the United States, a proxy war for the United States. So, Russia is actually powerful military nation, and that's just the reality. So I think the Americans are sort of getting consolidated by removing Venezuela from the eastern sort of bloc, so to speak. They solve a bunch of other issues, right? They stop oil to Iran. They blockade Cuba, right? So now Cuba is at play. I think Cuba's next to fall or flip. It probably has an influence on the Mexican cartels because of the drug flow goes, Venezuela, Ecuador, Colombia, and ends up in Mexico. Probably goes through the Caribbean islands as well. So I think we might see a consolidation and alignment of the Americas towards, let's say, Western political systems. I personally like it. I think it's good. I don't like communists. But nothing's perfect, but I kind of like it. Not gonna lie.
It's definitely a change, right? We are seeing a huge change in geopolitics. And I mean, but the crazy thing is they took Maduro out, but has anything changed? Like in Venezuela, like they left his vice president to run the place. I think they still got the same thugs and communists up top of the whole entire society. So I don't really see.
I think the tricky thing there's two options. You either let the vice president of the same party take power, and then you just remind her occasionally, hey, remember what we did to the president? We can do it to you as well. So maybe play ball, right? Or they installed the opposition party leader in, but that would have probably led to a civil war.
Yeah.
And a civil war means an Afghanistan type scenario where now you got to get in and help, and it's a mess, and now Colombia is going to get involved, and you know what I mean? So it's just a mess. So I think they wanted to avoid a drawn out, messy conflict. This is the way that Trump does geopolitics, hits really hard and then steps back and watches.
Mhm.
So I'm happy they actually did it that way, because at least it's a trend change, even if it's slow moving. It's a trend change. We'll
Yeah, it's a new world, absolutely, and we got to stay on top of everything that's going on, or you risk falling behind. And the best way to stay on top of it all, I think, is to get yourself some Bitcoin in cold storage. Make sure you got it, and then you can take your wealth anywhere in the world. Juan, we are at the end of our hour here. It's been an absolute pleasure having you on the show, getting to chop it up here on the biggest news in Bitcoin. If people want to follow you, your writing, where should they go?
Yeah, look up Juan Galt Bitcoin Magazine on Google, and you'll get my profile, all the different articles that I'm doing, covering the most interesting sort of businesses and news in the Bitcoin business space. A lot of work on self-custody and looking for companies that are both advancing and leveraging the cypherpunk technologies, the cryptographic technologies that made Bitcoin possible, but are also good at business, right? So it's sort of that sweet spot that I think is where the real revolution, so to speak, is happening.
Absolutely. You work for Bitcoin Magazine. They got the big conference coming up in April. Vegas, baby. We'll be there. We're helping to promote, sell some tickets, do that whole thing, Yeah, we're friends of the program. We're hopefully
that's awesome. Well, it's bear market prices right now. You can get 2 or 3 days, I think, out of it for $100. So might as well grab that.
Bada bing, bada bing. All right, everybody. Thank you so much for tuning in. We are live Daily Stack every single day. We're going 11 a.m. here with Bitcoin News Weekly, but we got the rest of the shows 12:30 p.m. the rest of the week. Big week ahead. Huge guests. Thank you so much for tuning in. This is Rob Wallace with a good friend, Juan Galt.